Welcome to another day in the Matrix. This is Waters Above. It's been another wild week in these markets. Big options contracts expiring today for Bitcoin and Ethereum, hence the volatility. And as of yesterday, the court jesters ruled that Craig Wright is in fact not the creator of Bitcoin and is not Satoshi Nakamoto. So everyone can move on from that psyop now. We have a lot of red across the board in these markets and a lot to cover in today's video to fill you all in on what to expect next for the crypto market as we transition into a very important week ahead with the upcoming Federal Reserve Board's FOMC meeting on March 20th, next Wednesday. And I have some really important data to share with you regarding the timing of all of this. So let's jump straight into it. If you're new here, we do cryptocurrency technical analysis and combine it with Gematria, Numerology, and Astrology to understand these markets. Feel free to subscribe and turn on the bell notification to stay updated on when new videos come out. And make sure to give this video a like and share this channel with other conscious beings to help grow our community. And with that being said, let's take the clear pill. So to kick off today's video, let's revisit 2021. During Bitcoin's first breakout into price discovery, this breakout right over here initiated in mid-December, and it stalled out about 3 weeks later on January 8th, 2021, followed by a 30% correction over the following 2 weeks that pivoted after a total of 19 days before entering recovery mode. And that was effectively the top of the market when the true alt season cycle started. And since we brought up the alts, it's important we check in on where Bitcoin dominance was during that moment. So let's open up this Bitcoin dominance chart. And I'm well aware that there's going to be a discrepancy between the percentages if you're looking at this on CoinMarketCap or if you're looking at it on CoinGecko or here on TradingView. There's going to be a discrepancy in the percentages. It's not as important. What matters is structure. So we could see right here, this was the move into late December 2020 into January 2021 and effectively a blow off top. During that time, we can see Bitcoin dominance was around 70%, rallying almost 15% during that 3-week breakout in the first phase of price discovery for Bitcoin. And as of today, Bitcoin dominance is sitting around 50%, over 25% lower. And when you look at the structure for this Bitcoin dominance chart at that time, that was a blow off top. And what we see today is that we've been sideways effectively in a range for around 150 days, going on 5 months of sideways. So very different looking structure. Now let's look at what Ethereum was doing during this time frame. So it was during this breakout initiating right here. I'm going to go into the daily chart. It's going to give us a little bit more data. It's going to make things a little bit easier to understand. So we have right here into January 10th, effectively right when Bitcoin corrected, we had a 30% correction for Ethereum as well, but it was short and sweet, and then generally trading sideways and to the upside and retesting prior all-time highs within that same phase comparatively when Bitcoin was experiencing its first mid-bull run correction. So this is quite a different market that we have today. Actually, we can see that Bitcoin or Ethereum is catching up, but Bitcoin has already started to stall out, got slightly above the 70K level, rejected into today. As I mentioned a little bit earlier, we do have big options contracts expiring alongside with Bitcoin. We're getting equal pressure, and I'm just bringing this up today because it could be very telling of what the next phase is for this bull run cycle. And as I brought up, we have a lot to go through, but these are just some opening points, and I have a couple more things to point out. First of all, we can see a large discrepancy between our Bitcoin dominance being at around 70% back when ETH was just approaching all-time highs and when Bitcoin was breaking into price discovery. And we also have this kind of quick, sharp pullback for Ethereum. Right now, things are coupled together, a lot more similar, but what I'm about to get into in a moment is going to show that things are actually quite different. So if we check in on most of the altcoins during this time frame of early January 2021, they all had about a 30 to 40% correction. But the big difference was Bitcoin dominance was almost 40% higher from where it's at today. Also, let's check in on the total market cap. I believe that that's a very important data point to bring up. So here we are looking at the past cycle, and we're going to be zooming into this January timeframe right here. We have the market stalling out right around the January 10th timeframe across the board. This is including Bitcoin, of course, Ethereum, and all altcoins. So it's the entire crypto market during this early 2021 phase, and it was already in price discovery at that time. And if we compared to where it was from the prior cycle highs, you can see it put on about a 50% gain during that time frame into the first or second week of January, and then a noticeable pullback. Well, if you zoom into what's going on today, you could actually see that we are not in price discovery. We're slightly below all-time highs, but we're pretty close. But for context, 50% higher from where we're at in our current market cycle top would be putting us around $4.5 trillion market cap. Now, based on where we're trading at today, that would be about an 80% move in order for us to get back to those levels, essentially packing on about 2 trillion more in market cap. And even if we played it conservative and considered just half the performance regarding this example, that would still require about a trillion or so more, about 1.2 trillion more added to this market to be at a similar place. And we aren't even close. Even with all these inflows from institutions lately regarding this Bitcoin ETF narrative. And what should flare up your intuition is looking at these charts of the inflows from the institutions and how much Bitcoin they're acquiring since the approval and launch of these ETFs, and how little it's actually moving the price. Bitcoin was only up about 5% into price discovery from breaking out above 69,000, the prior cycle top. It's only about 5% into price discovery with all this institutional demand, and as of today, Bitcoin is trading back within the prior cycle highs. And I'm aware the institutions would be using OTC or over-the-counter or purchasing directly from miners in order to quote-unquote not affect the price. But then what would be the case with this run-up that we've had for the past 2 weeks, essentially, that retested prior all-time highs? So when will the narrative work? You know, it's kind of precarious what we're in right now, and I think that's what a lot of people are starting to navigate. And the fact that we're getting a little bit of this pullback today is showing that this whole breakout that we've had thus far is very awkward. So all in all, with this data that we have for the institutions buying up effectively all the Bitcoin on the open market, so far, it's been an underwhelming breakout compared to what we've seen in the past without institutions being involved in the conversation. So this is why I say your intuition should be flaring up right now. One thing to mention is just how strong all of the buybacks have been for Bitcoin. Let me just go into this 4-hour chart and show you what I'm talking about. So we could give it credit for that. Every single dip is bought back up. It's a cat and mouse game between the whales, exchanges, and leverage traders. We've had $3,000 to $4,000 moves up after several of these flash corrections. Just the following 4-hour candle back into recovery mode. So Bitcoin is clearly bullish just by this metric alone, but still, this is a very precarious breakout, all things considered. And also, I know for many, the Bitcoin halving data has been thrown out of the window since Bitcoin did technically break an all-time high before this upcoming halving. But let's just check in with a couple things real quick that could be helpful for those that are new to this market and are caught up in the euphoria of everything and have yet to experience a larger correction or perhaps a moment of sideways as an active investor. So I just want to quickly check in on the prior iterations of the Bitcoin halving and how Bitcoin behaved during that market. We have 2012. We can see here it was about 50 days of trading sideways or so before we continued the party. And let's go to the second halving that followed up. Here we did get a dump after the halving, but if we take from the halving date to about the pivot point right here, it was 56 days. So in the prior cycle, we had about 50 days. Here we had about 56, pretty close. It's around or a little under 2 months. Now let's go over quickly to the following cycle, which is the last halving. And we can see right here, we were effectively sideways for 50 into 60 trading days before some recovery energy. In all prior iterations, all 3 block reward halving events followed with about 2 months of sideways, which presented an opportunity to accumulate Bitcoin, or for those more adventurous, to build up your degen bags in preparation for the next moon mission. But all jokes aside, although Bitcoin has technically broke out into all-time highs before the halving, it's been lackluster to say the least. And considering this Bitcoin ETF narrative has been absolutely consuming the space, and we see what's going on with the meme coins, well, this really feels like a setup. And so far, this structure seems very similar actually to this 2017 market, which I believe I did speak about in my last video, but let's just quickly recap that. During this same time of year of March of 2017, Bitcoin did technically break into all-time highs, as you can see right here, around March 2nd, with a daily close above all-time highs. And then we made it about 7% above all-time highs, then had a 33% correction. Bitcoin started to show weakness on March 15th into March 16th, and today is also March 15th, and we see Bitcoin so far is struggling to break out into price discovery. This correction back then ended on March 25th. This year, March 25th, is our lunar eclipse, which I believe is very important to keep in mind. It'll also be the start of eclipse season, so we're about 9 days out from that right now. And another thing to note is it will be a week out from Mercury retrograde, which plays an important role in the way Bitcoin behaves during certain phases of a cycle, which I will get to in a moment. But keep in mind this upcoming full moon we have, which is a time frame that we're technically bearish, but we could also be sideways and slightly down, but generally it's the most bearish we get during a microcycle. Well, that'll be obviously our upcoming lunar eclipse on March 25th, which interestingly is during the week where on most iterations for the S&P 500, every 12 years during the year of the dragon, which we're in now in the Chinese zodiac, that week marks the short-term top for the stock market before a correction into May through June. So I just want to quickly recap that analysis for everyone. We'll be opening up this S&P 500 data. And if you're brand new to the channel and you haven't heard of any of this stuff, well, welcome. That's what we're doing here. We're looking at this market from a more esoteric perspective, adding in some of these other elements that could be revealing to you what's actually making this market do what it does in its cyclical nature. So I have some evidence here to share with you. Every green box will be the year of the dragon, which we are in now. And you'll see the fact that we're trading bullish into mid to late March is exactly what we've done in every other cycle. And I want to show you that really quickly. So I'll just pull up the weekly chart to make this data look a little more clean. And essentially every year of the dragon, you see the market stall out into late March or early April before a pullback into either late May or early June. Let's go back to 2012 and I will show you each iteration of this. So we have this year of the dragon here. We can see the highest weekly close was in the candle of March 26th. Then we had a correction into June, followed by a recovery and continuation to the upside. Let's go back to the year 2000, which was the dot-com bubble. We can see that the highest candle closure we got was March 20th, followed by a correction. We did get this false recovery sort of double top into September, but effectively we did get a deeper correction that followed, and the highs were that March 20th candle. Now we're going to be going to 1988. which is the prior iteration. And you can see that the highest we got was March 14th, and then traded correction into late May. As I've said, the corrections tend to go into late May or early June, and then we had a recovery phase to the upside. Let's go to 1976, which was the prior iteration, and you can see right here, highest close was March 22nd, followed by a pullback into June, and then recovery. And note how all 4 of these iterations had the lows for the entire rest of the year coming in during late May to early June. So you want to keep that in mind because that pattern is there. It's obvious. Let's go to this iteration over here in 1964. Although we were bullish past that initial time frame, we can see that still we got this short-term correction into the month of June, followed by continuation, and June was the lowest we went after this short-term pause. Still following the same vibe. Now let's go to 1952 and finish off here on this iteration. We're going up into highest candle close of March 24th. So you get it. There's an obvious theme here. Now we have more exoteric data, which I want to get into, which shows that during presidential election years, April and May are months that we see pullbacks. So these red candles are the presidential election years. March also being one of the best performing months of the year. And here we are about halfway through March. Things are looking pretty good. Stock market's generally at an all-time high right now. So why is this all important? Well, it's because I mentioned this 2-month sideways period for Bitcoin after the halving, that 50 to 60 days that we get. And we know the halving is upcoming in April. And it'll be around April 19th to April 20th. And plus 2 months puts us into June 18th. And that could be very important because late June, right around June 18th, we have the June 21st full moon. We also have data that shows a very solid performance for the stock market during the month of July. And July is also known to be a month of extremes for Bitcoin. When we're bullish, July can be very bullish for Bitcoin, but when we're in a bear market, July can be very bearish. So since we're in a more bullish market today, and we have the data that shows us how the stock market behaves in this 12-year cycle during the Chinese zodiac, with market tops in late March into early April and corrections into May, June, and a recovery through July, this all aligns perfectly. The only thing that could throw a wrench in this is if Bitcoin does something that it's truly never done before, and it starts concretely closing weekly candles above all-time highs. So let me just quickly pull up the chart, pull up the weekly, and show you what I'm talking about here. So far, the current weekly close is right there at prior all-time highs, and we're already getting a little bit of a rejection. So I'm aware that although technically last week there was a new all-time high before the halving, we still have the candle closures on the weekly chart that matter the most. So the way it's performing as I filmed today's video, approaching our upcoming weekly close in a couple days, it's not a convincing performance, all right? And please know, I am not bearish at all. We're just here navigating this cycle calmly and not overreacting to anything that happens, because this is the worst asset to react emotionally to. And one of the few assets where if you just learn to stay level-headed and conservative in your approach and take profits along the way, well, you can walk away from this cycle profiting handsomely. So just to wrap up my last thoughts, if Bitcoin was to just continue to the upside and break into 80,000 within the next couple of weeks leading into April, and along with that breakout, we see Bitcoin dominance also putting on about a 5% gain from the current highs, well, then we'd have to get ourselves prepared for something similar to 2021, which was honestly the most difficult cycle to navigate, and it was also the shortest cycle. But of course, it was glorious for anyone who was positioned early. Unfortunately, like most cycles, retail gets in way too late, and then they trade emotionally. So they're late to the party, and it will be a very sloppy and quick party for them. They will probably not leave happy. And I'm not saying this to discourage anyone. I'm saying this so you don't get sold on a fantasy. But the good news is, if we correct over the next couple weeks into the halving and build some structure, cool off, and shake out the weak hands, then we'd be primed for an actual price discovery rally. And that correction would be a lucrative opportunity for dollar cost averaging. Not only if you're new to this market, but if you're somebody who's a seasoned investor. So if you're either new to crypto or you missed out on the last cycle and you want to develop a stronger investment thesis and have a solid exit strategy, that's what my Crypto Mastermind course was created for, to learn how to calculate when to de-risk your positions, to get your hard-earned money out of this market so you can kick back and relax and let your house money work for you, while you patiently wait for the true profit-taking opportunities, which we are far from at this time, unless you're in some degen meme coin. In that case, you could wake up to a rug pull at any moment. So if that's the game you like to play, then you definitely don't want to get greedy when you're in profit, because rug pulls during a bull run are real. So no matter what your plans are for this cycle, whether it's playing the long-term holds or getting a little riskier with venture capital plays, my Crypto Mastermind will help you build a solid foundation. And this course even includes my entire exit strategy blueprint for free, which brings even more value to the course, so you can be prepared to know exactly when to sell your positions, and when we enter the next phase of this bull run, you'll be prepared for that. So that Crypto Mastermind course is available on my website, watersabove.com. I greatly appreciate your support. And as mentioned moments ago, I brought up Mercury retrograde and its effect on Bitcoin. I believe I also covered this in my last video, sharing there is a window of time around 3 weeks before Mercury retrograde where Bitcoin tends to top out, and then we have a correction into Mercury retrograde. So all these red boxes on the screen are the Mercury retrograde phases. We have one coming up on April 1st, and that range that I exposed to expect us topping out before Mercury stations retrograde was about 17 to 23 days. So we have about 3 weeks or so is what I like to say, just to keep things open. And thus far, we're about 19 days out. As of today, we're about 17 days out from Mercury retrograde, and we effectively had our top so far on March 13th. So our microcycle top, it was around March 13th, right around this month's new moon within the 5-day window, which is what I teach. 5 days around a new moon is when we have our microcycle tops, and 5 days around a full moon is when we have our microcycle bottoms. And here we are, March 13th, 19 days before Mercury retrograde, and it lands perfectly in that sweet spot of what we've seen in prior iterations of how Bitcoin behaves during Mercury retrograde, where it tops out and then corrects into Mercury retrograde. And in most cases, we actually trade lower after this phase of Mercury stationing direct. So after this day here of April 24th, we can anticipate even some more corrective action. That's what we saw over here as well. And remember, this was the day the Bitcoin ETF was approved. You have Mercury retrograde, and we traded lower after than what we traded during Mercury retrograde. So just keep that in mind. In plain English, whatever Bitcoin is trading at during the first day of Mercury retrograde has significance, because in most iterations, Bitcoin trades lower than this level, either into the end of Mercury retrograde or sometime after this phase. Now, in the rare situations where Bitcoin rallies during Mercury retrograde, like you see here, which is rare, we still see a correction lower than the price of the last day of Mercury retrograde in 12 out of 13 iterations over the past 4 years. 12 out of 13, that was the case. So most of the time, we either correct into Mercury retrograde, or we correct during it, like we saw over here, or we correct after it. In many cases, it's a combination of all three. Now, Mercury retrograde is from April 1st to April 24th. This is the same time frame of the Bitcoin halving, and I already showed you how around the halving, Bitcoin tends to be sideways. Well, during Mercury retrograde, Bitcoin tends to be more sideways, trading below the highs that came before Mercury retrograde. So whatever high comes in before April 1st is important to be aware of, and it could very well be the one that we just got a couple of days ago. And that could be the highs for a couple months, considering the data I shared with you about how Bitcoin behaves around the halving. Also, to keep things relevant, let's look at how the last 3 Mercury retrograde phases went for Bitcoin. The last one, we were sideways, and we did experience a deeper correction after Mercury was stationed direct. The prior iteration in August of 2023, Bitcoin dumped into it about 22%, traded sideways, and even traded sideways for an additional month after. Then we have April 2023 over here. We have the same effect where there was about a 20% full correction from the microcycle top before Mercury retrograde to after. But I just want to show you how it took an additional month after Mercury retrograde for us to pivot. 1 month after this upcoming Mercury retrograde will be late May of 2024, which perfectly aligns with our Year of the Dragon analysis for the S&P 500, as well as the election year data, showing us a big red candle in election years for May. As I shared with you, we tend to have our lows around full moons, late May, full moon this year. You see where this is going? So we have a lot of data that points to this. Of course, Bitcoin could do whatever it wants. It has its own narrative right now, and it could do miracles. But I'm just letting you know this is what we have to consider. So there's enough evidence here that we're due for a correction. And next week on March 20th, we have the upcoming FOMC meeting. And that is crucial because it's in late March. I do believe that could be setting the tone for perhaps short-term top for the stock market before a correction into late May or June. I don't think the Fed is ready to full-blown pivot just yet. I don't think we're ready to go into recession just yet. We're in the middle of an election year. There's still a lot of other things to distract humanity with. So there's plenty of other psyops to consider. But for now, for Bitcoin, the downside target to consider is what I want to get into now. We could wrap up today's video, and it's this horizontal trading range that we had about a month ago before this breakout. This one right here, and then this one. So we have right around last month 50K to 52K, 2 weeks of sideways before Bitcoin broke out. Interestingly enough, if we take from where we're at today and we were to trade into the middle of that range, it would be a 30% correction from our local top. And that aligns with the 2017 cycle when Bitcoin broke all-time highs slightly. And then by the end of March, it started to correct for the pullback. This makes 50K an important level for a backtest. That would be an ideal reset of sentiment, which would also be beneficial to maintain a healthy momentum and continuation throughout the year. Of course, 50K is also a psychological level, but also please be open-minded to even deeper and more dramatic corrections because, well, crypto is known to do that. Bitcoin is also known to do 40% corrections as well. And I'm not saying it will happen, but don't disregard such a possibility. A full 40% correction from where we're at today would bring you right around 43, 44K Bitcoin. So just keep that in mind, especially if these institutions really want as much Bitcoin as possible. The easiest way for them to accomplish this is by flooding the market with panic. And these market makers have the politicians in their pockets, which means they have the news outlets in their talons as well. They can generate fake news at any moment to bring panic to these markets, just like they generated fake news back here of ETFs being approved ahead of time, and they weren't. So just keep this stuff in mind. You shouldn't be surprised if a real event happens on the world stage over the next 30 days or so as well. This upcoming April 8th solar eclipse is important. They will ritualize this. I've been warning you about this time frame of mid-March to mid-April for over a year now, just the months of March and April, specifically for the Year of the Dragon. And we're here we're here and things are heating up on the world stage. So in the meantime, keep an eye out for Bitcoin on this 61K level. A 4-hour close below this 61K level is likely to trigger further continuation to the downside. And there's not much trading built up between 61 and 51. As of today, you want to be looking out for a daily close around this 13 exponential moving average, which Bitcoin has penetrated below, but has been quickly bought up. As I've said, it's been very bullish lately for Bitcoin on any short-term sell-offs. Barely any pain. It's just bullish in general. But keep this 13 exponential moving average in mind, because that would be a sign of a reversal starting if we were to close below that. Typically, when Bitcoin interacts with the daily 13 EMA, it will hold on closes and bounce from this level if we're going to maintain a bullish momentum. But usually when we close a daily below this level, especially after such a strong rally combined with an overbought RSI, this signals a correction is underway and buying pressure is exhausted in the short term. So just be open-minded right now. Don't bet on a correction either. Too many new investors want the market to work in their favor, but never want to take the time to actually learn how to work with the market. If you're brand new here, especially to this whole investing thing, consider any dips as opportunities to dollar cost average. And even if you're not interested in Bitcoin, learn how to use Bitcoin as the crypto market compass, and know there is still plenty of opportunity in the altcoins, as I showed in the video earlier. So you want to be looking for the altcoins that aren't already trading near all-time highs or are not already at all-time highs. Those aren't as lucrative as an opportunity. I'll just quickly point one out to you that's a good example that could be a lucrative opportunity, and it would be this one right here, Aave. We can see that Aave still has about 400% or so to its prior all-time high, but look at its past performance. It was one of the best performers in the last bull run, doing 160,000% gains. And if you were to look compared to where it is from the C19 crash, we're up about 8,000% or so. So there you go, 7,500% from that level. But if you look at the Litecoin chart, you can see that Litecoin is actually barely 100% above those levels. It's 120% above this correction. Bitcoin has way outperformed that since. So you got to just look for the opportunities, but don't disregard past performance. You don't want to bet on a lagging project such as Litecoin when you have the performance of Aave in the past, and you could see how far it is away from its all-time high. It still has plenty of room to backtest prior highs, and that is a much more sound investment thesis. Even XRP is actually doing better as far as that metric I just shared from performance since the C19 crash comparatively to Litecoin, and XRP is one of the most suppressed plays in this entire space. So hence why I'm so bullish on XRP for this cycle. And make sure to check out my last video regarding XRP if you haven't already, because if we're truly mimicking the 2017 cycle around the same time of year, and if Bitcoin is in fact about to experience a 30% correction, and we have some crucial dates coming up for XRP in April that could put Ripple on the spotlight and XRP for a speculation phase leading into the grand trial of the SEC case, and we could experience an impulsive move for XRP just off of that. And we saw with our own eyes back in 2021 with the start of the SEC lawsuit against Ripple at the end of 2020, trading at around 19 cents, and at the start of 2021. And it went on to do a 10x in just 100 days leading into mid-April. So I'm not saying this will happen with certainty, but we've watched XRP do crazy moves in late March and during the month of April, and this 2017 cycle so far is playing out similarly month by month when comparing Bitcoin and XRP's price action. And the last thing to bring up is to be cautious around this time. Please be cautious around this time, because we have two examples in the crypto market where the market was unsustainably overheated into the month of April, and it followed with a big correction and around 200 days of sideways. Our last cycle is a great example over here, where we topped out on April 14th, and then we had about a 55% correction. It took around 190 days to recover back to the levels that we were trading at those highs. That was an extreme example in current markets, but we have an even more extreme example going back over here. We have this wild rally up until April 10th of 2013. This followed with an 80% correction in less than a week, followed by a false rally bull trap into the same month. And it really held sideways for, 190 days, 200 days. Please know, I'm not saying that this will happen this time, but if Bitcoin was to just get bought up right now from today's correction and head up to 80K, 90K, or even 100K over the next 2 to 3 weeks, especially if it's trading above 80K during the halving, then I would anticipate something like this to play out. And please know, I'm not saying that's what will happen this time. I just think it's something to consider. A scary correction would most likely be in the cards if we were to just keep going up and up and up from now. And we traded all the way into 65,000 this morning. If that's it, if that's the dip, then yeah, I don't think this market's going to be as fun as a lot of people might think. It's going to be extremely elusive. And if it's just banking off of this ETF narrative, I don't think we're going to experience anything like past iterations of alt seasons. It's going to be a much different environment, and I'm open to that. I am. But I don't think that's the environment that most sophisticated investors want to be playing in. It's going to be pretty much the same nonsense as 2021. Riding off of a single narrative, and then once that narrative no longer worked out and the plug was pulled, everything came down with it. That's not going to be fun. So this next couple of trading days will definitely be interesting, with the traditional markets closing up today for the week, the FOMC meeting next Wednesday, while the stock market trades at all-time highs. The Bitcoin ETF narrative is the talk of the town. Meme coins are back. Shitcoin euphoria is stinking up the place. It's like we're back in 2021 again, and the space didn't mature one bit. It's actually quite sad when you think about it. So keep an eye on Bitcoin's daily close tonight. We have this 13 exponential moving average. So far, Bitcoin is having an incredible buyback off of the sell-off earlier today. But just this 13 EMA is something to keep in mind, and know that the stock market just opened up a little bit ago, so there's plenty of hours to go in this trading day. I want you to keep that in mind, though. And then closing below the 21 EMA, which is this orange moving average, that would really solidify an expectation for a corrective phase. And I'm not just talking about a couple days, I mean some sideways to follow. So we have the 4-hour analysis. Any 4-hour candle closes below 61K Bitcoin would be bringing us back into levels where it would put enough pressure on altcoins to make them a solid opportunity to dollar cost average before the next leg of this cycle. And with how bullish Bitcoin has been during every single correction so far on this run up, it should not shock you if we see 10% moves in either direction over these upcoming weeks. False breakouts, bear traps, and tons of volatility. Remember, it's always the market maker's goal to take your money. If you give them the money emotionally, you lose. But if you give it to them methodically, it's probably because you made a profit in the process. And that's all you're here to do, is profit off of this fairy dust. Don't take it personally. And as I always say, keep your emotions out of this game of investing and trading. Save your emotions for your real life and the real people in your life. This game becomes much easier when you learn how to do this. In the meantime, focus on refining your investment thesis and trading plan, and have risk management in place, especially if you're playing with leverage, which is not something I recommend for anyone unless you're experienced with technical analysis and are playing with a portion of money you can afford to lose. I have my advanced trading course for that, for those who are interested in actively trading this market. It teaches you how to stay safe and consistently profitable as an active trader, and ultimately how to make trading part of your overall wealth plan. But I do not recommend that course for complete beginners, only for those that know how to read the charts and are ready to take this to the next level. So I'll wrap up this video here, And welcome to any new supporters of the channel. We're approaching 75,000 subscribers, which is a big milestone for this only being the 3rd year anniversary of this channel. And I just want to let you know how grateful I am for all of your continued support and wishing you all an incredible rest of your week in this matrix. Much love.